Bitcoin's not going down a lot more. It's not going up a lot more. It's just going to go sideways for a while. I don't know. Could happen. If you look at the last 2 weeks of the year, kind of December 12th to 15th through the end of the year, usually pretty good, both for stocks and for Bitcoin. And so I think there's people who are looking for that Santa rally, the chase into the end of the year. I don't know if I would pin my investment strategy on what's going to happen in the next 28 days or whatever it is. But I do think that people should be very intellectually honest. Bitcoin was up a lot at some point this year. It has now come down. It's now down 10% over the last year. At the same time, if you go back to November 1st, it was at $69,000. It's now trading at 90. So it's up from November 1st last year. All these time lines that you pick, you can kind of manipulate the data to tell you good, positive, negative stories. If you look at the annual compound growth rate of Bitcoin over the last 3 years, 72%.
Bitcoin is deep in another volatile stretch, and while old narratives echo across social media, a harder question hangs in the air. What does intellectual honesty look like when the price finally moves against the crowd? Anthony Pompliano points out that Bitcoiners are unmatched at marketing during bull runs, flooding the internet with memes, excitement, and loud conviction. But when the price falls, the community often slips into excuses instead of clear-headed analysis. He argues that the best investors maintain intellectual flexibility, holding strong opinions but adapting quickly when new information arrives. Bitcoin's recent drop from 126K to 80K before settling near 90K is simply part of its long pattern of massive swings, a rhythm that has repeated like a global financial crisis every 18 months for a decade. Anthony Pompliano highlights that this downturn comes with an uncomfortable comparison. Gold and global liquidity continued higher while Bitcoin broke away and declined. Over the last year, Bitcoin has even underperformed U.S. Treasuries, a fact many in the community would rather ignore. Yet for disciplined long-term holders, lower prices are an opportunity, not a threat, especially for those avoiding leverage and steadily accumulating. Volatility, he stresses, is the engine that drives Bitcoin's long-term growth, not a flaw to be explained away. Anthony Pompliano then contrasts Bitcoin's weakness with a stock market sitting just shy of all-time highs, despite constant calls of bubbles, collapses, and doom. He argues that when fear becomes the dominant narrative, a major crash becomes less likely. Historically, markets tend to break when optimism blinds everyone, not when warnings are shouted from every corner. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
One of the things about the Bitcoin community is we are amazing at marketing when the price is going up. People get on Twitter. I'm one of them. There's a lot of people. The memes are amazing. All the excitement, the enthusiasm, the FOMO. We go on television. We got the articles being written. Everyone is like, this thing's going one way. One of the problems is that usually when the price starts going down, everyone's like, they start trying to explain it away, or like, oh, it's just a slight dip. It'll be back, whatever. That's normal because you're a bag holder. But I do think that the best investors that I've ever met, one of the most impressive feats or traits that they have is that they are incredibly intellectually honest. And many times what they're able to do is they're able to hold an opinion very strongly, get new information and switch around and have the exact opposing view very quickly. So if you look at, there's great traders, great hedge fund managers, great investors, the ability to change your mind. Now, the beauty of Bitcoin right now is the price is down. That's fine. Just say it. Price is down. No problem. Things volatile. Volatility is part of the features of Bitcoin. It's not a bug. You need volatility. So you need things, if they go up a lot, they're going to go down a lot. And over time, you want to see them continue to move upwards, but you need that volatility back and forth. So Bitcoin is volatile. Actually, volatility has increased a little bit over the last couple of weeks. That's a good thing for Bitcoin. Now, that volatility has worked against people who are long the asset. Okay, that doesn't feel good. Went from 126 all the way down to 80,000, almost a 40% drawdown. Now we're sitting around 90K. Okay, guess what? We've seen this happen many, many times. There is something like, if you go back and you look, during the global financial crisis, stocks drew down 50%. Global financial crisis. They made movies about this thing. They wrote about it. They're still talking about the global financial crisis like the Great Depression. It was bad. In the crypto market, specifically with Bitcoin, Bitcoin has experienced the equivalent of a global financial crisis every 18 months for a decade. So for a decade, Bitcoin has gone through a global financial crisis every 18 months. That's crazy. people, they got strong hands, right? They're not shaken out by volatility. If this is the bear market, only goes down 40%, Bitcoiners will be celebrating. They're using 80%, right? So I think that's kind of one big thing. The second thing is, maybe the more important part, is that Bitcoin going down actually is happening while stocks are going up and gold has been going up. So if you look at these charts where they put like global liquidity, gold, and Bitcoin, everything was tracking. It was high correlation until about Q3 this year. Sometime in July and August, all of a sudden Bitcoin broke from the pack. Global liquidity and gold continued in the same trend, and Bitcoin broke off and started going down. Again, you want to be intellectually honest? Bitcoin over the last 12 months is performing worse than US Treasuries. That's not a fun fact, right? That'll make people feel good. I don't like US Treasuries. I've been saying that for a long time. I think that they are created in a way, especially with the national debt continuing to go up, where they're only going to go down over time. If you look at TLT is down 42% over the last 5 years. It's down 1.25% in the last year. Okay, that means that if you buy bonds and you hold them, you're probably going to lose money. Now, if you go and look at Bitcoin, Bitcoin's down 10% over the last 12 months. So Bitcoin is doing worse than Treasuries. When you put it that way, that's taking those marketing skills that everyone has on Bitcoin on the way up, and now we start talking about it when it's going on the way down. But again, if you're a Bitcoiner, you understand the asset, and Bitcoin's price goes down, the Bitcoiners I know, they're excited because I get to buy more Bitcoin at a lower price. Everyone loves when it goes up, but people like to get a lower entry price. And so if you are still long-term convicted, if you are not shaken out by the volatility, if you were not undisciplined because you went and got a bunch of leverage or, a forced seller or anything like that, and you are continuing to acquire more Bitcoin and you're able to get it at a lower price, then those people are excited. And so again, nobody likes when the price goes down, but I do think that there's a nuanced conversation around that. Now, in comparison, the stock market right now is somewhere between 1% to 2% off its all-time high. And there's people who think that, AI bubble has popped, the world is ending, stocks are going down, everything's overvalued, all this craziness. I don't think any of that's going on. And so again, the more you hear the critics, the more you hear the people who are critiquing, the more that you hear people who are calling bubble, the more that Michael Burry's out there tweeting up a storm about whatever nonsense he's saying, the less likely it is that there's a bubble, right? Remember what I said to you back in April. The more everyone is telling you the world's going to end, the less I'm convinced. Because if everyone thinks the bad thing's going to happen, there's consensus around some bad negative event, that's probably not going to happen. And you probably have a surprise to the upside. Usually you get the negative recessionary periods or the negative market panic, kind of big crashes when nobody thinks it's going to happen.
Anthony Pompliano explains that markets often surprise investors precisely when confidence becomes one-sided. When everyone loudly predicts Bitcoin will crash to 50K or insists the stock market is a bubble, he argues the odds of those outcomes decrease. Surprises happen when everything is moving smoothly up and to the right, not when fear dominates the narrative. He notes that Bitcoin's performance depends heavily on the time frame chosen, down 10% over the past year, yet up from 69K last November and compounding at roughly 72% annually over the past 3 years. That contrast in perspectives explains why newcomers who bought near the top feel the most pain, while longtime holders with low-cost bases view volatility as normal. Adoption, network strength, regulatory shifts, and global interest continue to improve structurally, even as the price remains choppy. Pompliano also highlights how Bitcoin ETFs reflect a shift in traditional finance. Buying the ETF is like owning Bitcoin but involves less custody risk and a small fee, making returns slightly lower yet risk-adjusted in a favorable way for many investors. More importantly, major institutions like Vanguard and Invesco are now opening access because customer demand has become impossible to ignore. In his view, this isn't a sudden ideological shift, it's simply the market forcing firms to adapt or risk losing clients. The internet has removed paternalistic control over what people can or cannot buy, and financial companies are responding to that reality. Let's get back to the interview.
Good times are rolling, baby. Everything is going up and to the right. And that's when you get surprised to the downside. And the surprise is part of the pain. Here, everyone's screaming about Bitcoin's going to 50K. Everyone's screaming about the stock market bubble, right? Again, I don't know what's going to happen. But what I do know is that the more that everyone has consensus that something's going to happen, the less likely it probably is actually going to happen in my experience in financial markets. And so it's the surprise factor that's worth paying attention to. Now, the answer could be Bitcoin's not going down a lot more. It's not going up a lot more. It's just going to go sideways for a while. I don't know. Could happen. If you look at the last 2 weeks of the year, kind of December 12th to 15th through the end of the year, usually pretty good, both for stocks and for Bitcoin. And so I think there's people who are looking for that Santa rally, the chase into the end of the year. I don't know if I would pin my investment strategy on what's going to happen in the next 28 days or whatever it is. But I do think that people should be very intellectually honest. Bitcoin was up a lot at some point this year. It has now come down. It's now down 10% over the last year. At the same time, if you go back to November 1st, it was at $69,000. It's now trading at 90. So it's up from November 1st last year. All these time lines that you pick, you can kind of manipulate the data to tell you good, positive, negative stories. If you look at the annual compound growth rate of Bitcoin over the last 3 years, 72%. If I told you that you could have bought an asset 3 years ago and it was going to go up 72% compound annual growth rate, and by the way, people are going to be pissed about it, you'd be like, what? That's crazy. But we're down 10%, right? And so again, it all comes into their psychology, then there's the math. And what I see with Bitcoin is I see adoption increasing. I see the network being stronger than ever. I see it being more valuable than ever. I see more and more companies adopting the Bitcoin network or holding Bitcoin or doing something with Bitcoin. I see nation state adoption. I see the regulatory environment in the United States becoming more of a tailwind than a headwind. I see people internationally starting to talk about Bitcoin, use Bitcoin, adopt Bitcoin, both at the nation state and citizen level. All of these signs are good for the structural health and long-term prospects of Bitcoin. You're going to get volatility along the way, right? Doesn't make it easier when you're feeling it. Just, I wouldn't be worried. Look, if the first time you bought Bitcoin was at 126, you're like, I hate this thing, right? If you were buying Bitcoin at $1,000, you're like 126, 90, Again, like I like 126 better than I like 90, but I'm up 90x. How mad could I really be, right? So again, it goes back to, it's all about this perspective. The problem is when you get into these, especially in the blow off tops, 2021, if I remember the data correctly, at some point in 2021, 50% of people who held Bitcoin in the United States had come in 2020 and 2021. So half of the market. Now, again, it's really hard to measure that stuff, how accurate, whatever. Just directionally, a lot of people, the first time that they adopted Bitcoin was in 2020 and 2021. Well, guess what? When it went down, they were like, I didn't know that this thing could go from $65,000 to 16. People who had been around are like, man, I was hoping that wasn't going to happen, but I lived through this before. So I do think that it's not just the narrative, but it's also what is the perspective that somebody has. And so to your point, down 40%, that really hurts for a subset of people. There's other people who don't like it, but they're in a much better position and their cost basis is lower. And, they're kind of like, hey, it's part of the game. If you think about ETFs, buying the Bitcoin ETF is very similar to buying Bitcoin. Right now, I will argue that you actually have less risk because you're not taking custody risk and a number of other things. And so your return is going to be slightly lower than what Bitcoin's going to provide because there's a fee associated. It's a very small fee, usually 20, 25 basis points, right? But you're taking less risk than the person who goes and buys spot Bitcoin. So you should expect a little bit of fee drag, right? Now, what I do find interesting is there's a lot of these financial organizations that are all of a sudden starting to say to themselves, we can't stop our clients from buying this. We may lose clients over this. They may actually not want to have their assets here or use our product if we do not allow them to buy this stuff. And so Invesco, I think, is a big one. Vanguard, right? Some of these folks who either were slower or who were taking a rational, hey, we're going to evaluate this, see if this is right for our clients, all the way to some of these guys were like, nah, we're not ever going to let our clients do this. This doesn't fit our style. Now they're all like, we have to let them. Right? Imagine if they were like, NVIDIA, nah, we're not going to let anyone buy NVIDIA. People would just be like, what, dude? Like, what do you mean I can't buy a stock? It's on stock exchange. Same thing here. It's like, now you're going to pick and choose which ETF people can buy? That's not the world we live in today. The internet has busted down that monopoly on paternalistic oversight and what I should do with my money. People say, just give me all the options. Let me do what I want to do. Right? And I'll live and die with the consequences. So I think that seeing the Vanguards and all these guys start to now give access to these ETFs is less about they're changing their mind. And it's much more a story about just the voice of the people will eventually be heard. And my guess is someone internally, there was a piece of data, there was some sort of information, something happened where they were like, we have to do this because that's what the customer wants. And that's why you see change. It almost never is like, oh, I just woke up today. I didn't like it yesterday, but I like it now. All of a sudden I'm convinced. It's usually customer driven, which is exactly how it should be.
The broader takeaway is that Bitcoin's journey is shaped as much by human behavior as by market mechanics. Short-term swings, loud predictions, and emotional reactions can distort the picture, but the deeper current shows an asset steadily integrating into global finance. Network strength, institutional participation, regulatory clarity, and the growing availability of ETFs all signal a long-term foundation that continues to thicken beneath the surface. While volatility creates discomfort especially for those who entered near the highs, it also reinforces the importance of perspective, time frame, and disciplined positioning. In the end, Bitcoin remains an asset defined by cyclical turbulence but powered by structural adoption, and those underlying forces are far more consequential than any temporary drawdown or passing narrative. How might expanding global adoption and growing ETF accessibility shape Bitcoin's long-term resilience through future periods of volatility? So, stay tuned for clear, data-driven insights into the financial system. Don't forget to like and subscribe so you never miss our weekly updates. Thank you for your continued support, and we hope you enjoy the video.